I think India's biggest advantages, you wouldn't have one bank, you wouldn't have one fintech, you wouldn't have one UPI app. So it was amazing experience for a few years.
Dear listeners, this is your host Siddharth Aluwalia, founder of 100x Entrepreneur Podcast, along with my wife Nancy. Before we begin, I would like to thank our sponsors, Prime Venture Partners. Prime is the first institutional investor in category creating tech startups like MyGate, Neo, Dozy, Planet Spark. Prime is now investing out of its fourth fund, which is more than $100 million. Today, I have with me Amit Somani, managing partner, Prime Ventures. Amit, would like to know how you evaluate founders and what are the different evaluation criteria like?
Siddharth, so at Prime, we look for what we call category creating or category defining startups. So we're really looking for in what way is a startup 10x better, 1,000% better than the current state of the art. It could be product, it could be technology, it could be go to market, it could be a business model, whatever. So that is one core criterion. As for the founders themselves, we're really looking for founders that have very high learning agility or a very high learning quotient. Why that is important, Siddharth, is as you're going through your seed to pre-series A to series A and sort of journey to build your company, to get product market fit, to accelerate it, you have to make a lot of trade-offs and a lot of decisions. So we're really looking for founders that have very high learning agility.
Thank you, Amit. So listeners, let's dive straight into this week's podcast. Dear listeners, this is your host Siddharth Aluwalia. Welcome to the 100x Entrepreneur Podcast. Today, I have with me Bipin Preet Singh, co-founder and CEO, Mobikwik. Bipin is an engineering graduate from Indian Institute of Technology, Delhi. In 2009, Bipin co-founded Mobikwik. Mobikwik is one of the largest mobile wallet and buy now, pay later platforms in India. Its tech platform has 120 million registered users, 25.3 million pre-approved BNPL users, and more than 3.4 million merchant partners. Bipin, welcome to the 100x Entrepreneur Podcast.
Thank you, Siddharth. It's great to be here.
Bipin, would like to start with your journey before founding Mobikwik, right after your graduation. So what are the things and events that led you to founding of Mobikwik?
Look, I think, when you pass out of IIT, there are only a few paths that are available. And I think those are pretty well researched and written on media. I took the path of taking up a job, which is actually not one of the most popular jobs. But I come from a family, where I was the eldest son and two more siblings younger than me. And we come from fairly sort of, modest background before I started working. So the first thing that I had to do was to actually find a job, and I took up working at Intel. And actually, I started working when the world was going through a crisis. 2001 had just happened. The September 11 attacks had happened. The economy at that time, the world economy, the US economy had gone through a fair bit of recession. So I started at Intel. I loved chip design. I loved hardware engineering, being an electrical engineer, and started working in Bangalore. That was my first job, basically a design engineer. So, when you design chips, you write code which represent transistors, gates, electronics, etc. So that was the specialization with which I started my first job. I had a great time at Intel. It's a great company to, start your career with. It's one of the biggest companies in the world today. And so, I think I got to interact with a lot of people who were working from US. In fact, a lot of Indians, expats who had come down to Bangalore. Now it's the norm, but at that time it has just started, where they would come and start something really deep in terms of R&D. So this was the first chip being designed out of India, fully integrated chip being designed out of India for Intel. So it was amazing experience for a few years. Then I, switched to NVIDIA again in Bangalore, moved up as an architect. I started working on their chips, which are used in gaming and graphics. So different parts of the chips design and chip architecture started working on. And then, due to some family reasons, I had to move back to Delhi and started working at Freescale Semiconductors in Noida. Again, it was more as an architect, as a chip architect. But by that time, after having worked for, let's say, 6-7 years, it's like when you're about to hit 30, you're trying to figure out what to do next in your life, right? You started off in a certain path, but you want to figure out, because some of your friends are doing MBA, others are working in US. Some are becoming consultants, some are becoming bankers. Very few of them were becoming entrepreneurs or starting a company, at least what I recall at that time. But I had given GMAT and I had full plans to actually go to US to pursue an MBA, and got admits from a few schools also. But then, I think due to certain reasons, I didn't go. And but it was clear that the line of work I was working in, which is chip design, I was done with it. I was not going to pursue that anymore. If it was not that, and if it is not a higher studies to go to US, and incidentally, every time something major happens in my life, there is some world crisis happening. So when I passed out, it was 2001, 2002, September 11, when I was getting frustrated with my job. It was a 2008 global financial crisis, and that was happening in US. So it is around that time, I think, going for an MBA also wasn't making a lot of sense, taking loans and then basically paying back your loan for several years. So I think just I met Upasna, who had just come back from US after having worked at PayPal, and then we hit it off, and we basically decided that I'll quit my job and started Mobikwik. The idea of Mobikwik was born while I was still working, but I plunged into it with no capital, no savings, just a pure idea of some website which allows you to recharge your mobile. So as simple as that, but with a wallet, right? So that was one of the first things that we thought, that you don't want to pay for your 50 rupees recharge every time with your card or bank account. So maybe an online wallet makes a lot of sense, and then you can accumulate a lot of your payments. And there were no smartphones at that point of time, right? It was only desktop. There were some versions of smartphones like a BlackBerry or a Windows phone, but there was no Android. And iPhone had just launched in US. It wasn't available in India, or it wasn't popular in India yet. So yeah, interesting, very different times, very different sort of, I would say, startup ecosystem, very different, or early VC ecosystem, funding ecosystem. People who started at that time, would know that. But yeah, I mean, we got started and without thinking, right? I mean, that's how, as an entrepreneur, you do, right? You just take a decision and then you figure out the rest. You jump out of a plane and try to figure out if you can build a parachute on your way down. So that's my story, right? That's the story of starting Mobikwik. It was very humble beginnings and a lot of hustle, and we were bootstrapped for the first few years. First 3-4 years. These days, you start a company and you raise a seed round and an angel round. So we actually didn't do any of that. We started working from our apartment, literally, where we used to live, and put a desk in the drawing room, and the first employee would come and sit on that desk, and I would go in the kitchen and make Maggie and tea. So it was like that kind of a beginning. And then from there on, we obviously progressed, but it took a few years for us to get to a scale where, we decided that we are ready for sort of, what you're calling a 0 to 1. So we realized maybe sometime in 2012-13 that some things are working, that business is scaling, and that we have a product market fit, that people are using our app. We already had 1 million users. We were early on Android. We were one of the first apps to launch on Android in India, the Mobikwik app. And so we got good traction. And then, from there on, we started raising money. And then, yeah, here we are.
And Bipin, if you could describe, right? So the initial vision was not to transform the digital payments landscape as you are doing it right now. It was just to solve a specific problem that you started with. How could people do an online recharge?
So yeah, so I think I always knew that the problem is obviously the a problem that I faced personally. Right, I'm the eldest in my family, and I had two younger siblings, especially a younger brother. So not used to doing any work at home, and would tell him to do this and go get that, etc. But when I came back in 2006-7 back to Delhi, then my younger siblings weren't at home; they were either studying or working. So my mom used to say, "Okay, go get this 50 rupees or 100 rupees, 200 rupees top up for my phone." I'm like, what is this? You have to go down and give cash, and the shop is open, and then it takes like 15 minutes of time, energy wasted. Why can't this be done online? So that's how the problem statement which I was facing personally transformed into some form of an idea. Then I studied that India has a lot of people who are on prepaid, still do. So, and the mobile phone market was growing very fast. So I said, why not make a website which will do this? But then, I had a little bit more foresight to say that, obviously this is only one use case. This has to develop into something bigger. And so at the back of the mind, payments was definitely there in terms of a larger payments play or a wallet play. But yes, I think you can't start a company unless you're solving something very specific for the first time, or the in the best possible way, which users will then start using.
You are saying that you can't build the platform on a day one. The platform has to evolve from some specific problems.
No, you can't. You have to solve something very specific, something very deep. Even if your broader idea is a larger sort of set of markets, but you can't attack that. Like, for example, if you were to try to build a search engine today to take on Google, right? It's very tough. People say it's impossible. It's not impossible, but you can. You wouldn't start making it as a generic search engine like Google. You'll have to find something where you can outdo Google in a very specific kind of a search functionality, maybe only for a specific set of customers, a segment of customers. And then once you get traction, then you expand, and then you can say, okay, I can do this and this and that. So I think this is a similar story for, in my view, of almost all companies. Even if you have a larger vision in the beginning, you have to start very specific and very narrow.
And what about the entrepreneurs of today, who have the platform word in their seed uh, fundraising decks? Any advice for them? Because people want to build platforms, or are pitching to build platforms from day one because it's much more lucrative in the eyes of others.
Look, I mean, I don't think that it's bad to be ambitious. I think it's good to be ambitious and think big. But honestly, you know that starting a company and making it successful is full of risk, right? 98, 99% of the companies, startups are not going to survive. Even after seed round, there is a high sort of a fatality rate in terms of who is going to get to Series A and then Series B, C, etc. Um, and I personally believe that it's better to have strong traction at each stage, and have the vision, but the execution go broader only as much as it's needed, right? If you go too broad in the beginning, I think you can't do justice, because to build a large platform, you need a lot of resources, you need a lot of engineers. But if you were to build a product which is like a platform, without figuring out how to get distribution, for example, or how to get users, then it almost always doesn't work. So it's best to actually link distribution with your product early on, get the traction, build it, expand it. And I think that's what works. Not to say that something which is very deep tech doesn't necessarily need, let's say, you may need 12, 18 months, 24 months of build out. But I think then the end product or the platform has to be, let's say in 24 months you build something which outdoes Google, right? Or you want to build a social network which is really bad. Those are bigger bets, and there, you can be bold and say that, okay, I will build something. Or you want to build a replacement for Microsoft Word or a Microsoft Excel. So those are much harder problems. But I think most of the ideas, startup ideas, are not that. Most of the startup ideas, at least in India, are more service oriented, linked to distribution, linked to customers or transactions, etc. So there it is best to get the proof of traction early on.
And Bipin, if you could share, from 2009, how did Mobikwik evolve in each year beyond the recharge service?
Yeah, so like I said, we started with recharge as a service, but the service was delivered via a wallet. It was a desktop wallet, so you could load up a wallet and you could use. Then we added other kind of services. which are more similar to bill payment services. So we initially added television recharge. So it's about the same time when people had started. These days almost nobody uses cable, but that time everybody was using cable and not satellite television. So satellite television like Tata Sky, etc., had started coming up. So people needed a service where you could top up that, and that's also prepaid. And then from there on, then other kind of billers, electricity bills, landline bills, different kind of bills. I think it was largely a bill aggregation game until about 2012-13 when we launched the app. And also there was some amount of P2P also, so you could transfer money to each other, even though it was just a wallet, because there was no UPI at that point of time. You couldn't easily transfer money from one bank to another. I think 2013 we got a license from RBI to run a wallet properly. Before that, also we were running a wallet, but it was more like a closed wallet. That's when the second phase started. The second phase was about adding now merchants, right, into the mix, which is not just about what you're paying on the Mobikwik app, but also what you can pay with Mobikwik on, let's say, a Book My Show or a Make My Trip, or an eBay, which used to be very popular at that time, and Domino's to order pizza, etc., Food Panda. So getting on the merchants, especially the online merchants, was the second phase, and that's when we raised funding, also Series A, because it was becoming clearer that consumers needed better payment experience online compared to what was available, which was largely around cards and internet banking. Cards and internet banking worked, but with a wallet you could have a much smoother experience. You could have a one-click kind of an experience, especially paying online. So that was the second phase of our growth. And then then that third phase came when we started going into the physical merchants also, and we got Big Bazaar at that time. We were one of the first wallets to go live on all the Big Bazaar stores, where you could actually go there. And at that time, before QR codes, there were different kind of formats that evolved in terms of how you make a payment. Some of them are actually making a comeback right now, in terms of either getting a ping or a notification on your phone to approve a transaction, etc. So paying in a physical store started picking up, and then QR codes happened in a big way. And then UPI also, I think, happened around just post demonetization, around that time frame. So at that time frame, when UPI also happened, and there's obviously competition in payments, etc., was also growing up significantly. What we figured is that while payments will be a great mechanism to get customers on board, a great mechanism to create trust, um, customer trust and engagement, but as a business we needed to do more in order to generate margins and profits. And so we seriously started thinking about what is it that we can build on top of it. And we had two paths. One path was like trying to become a super app, which is that we already had 20 million plus users at that time. I'm talking about 2017-18. So we could have gone on the add e-commerce and travel and ticketing and other kind of services on the app, and monetized this customer base using that distribution and the users who were on the app. Or the other path was to actually build something which is more deeper, and that's the path that we chose with some deliberation. We said that we're going to go deeper into fintech, and the first fintech product that we built, and we were one of the first ones to do this, was digital credit, because we saw that most of the people in India do not have a credit card, and they do not have access to formal credit through banks even today. So even today, it's about 50 million people have credit cards. At that time, it was less than 30 million. But obviously, internet and digital payments and transactions was accelerating, and UPI had started coming into the mix. And UPI is more about making payments from your bank account. So we saw an opportunity that credit is going to be big, and credit uh, should not be looked at just as taking a loan. Rather, just like you use a credit card to just make payments and clear it, maybe what will happen is that people will start using money and making bill payments and transactions without having money in the wallet or without having money in the bank account, and then settle it later after a few days or weeks. right, based on their convenience, just like what a credit card offers. So that was the beginning of our buy now, pay later journey. So we decided that we already have a wallet, and the wallet needs to actually have money in order to transact. So we would remove that requirement based on our assessment. So we built up a strong data science team, first to understand customer behavior. How could we build risk models or underwriting models on top of the data that we had, which included type of device, type of transactions that customers are doing, how much they are transacting, what is their likely income, do they have a card or not, which state of society or income or affluence do they belong to. So basis that, we started giving sort of small ticket credit to customers, which is linked to the wallet. This product is called Mobikwik Zip. So this is where we actually pre-approved more than 20 million, 25 million users from our own customer base. And we said these customers do not have a credit card, they do not have any other forms of credit. So we'll give them digital credit linked to the wallet and start doing transactions just the way they are, except that now they don't have to put it in the wallet. They can just do the transaction. So I think that's been what we've been focusing on over the last 3-4 years, and that business has grown significantly from zero to almost now 30 to 35% of our overall business comes from credit. And we also have plays on wealth side and insurance where we are building technology, uh, but we're still early there. We have mutual funds platform, we have ability to sell insurance on the Mobikwik app. But I would say the biggest fintech product that we are focusing on is buy now pay later. And 2020 was very interesting. I mean, so this was like, I would say, phase 3 of our journey, and it was going around nicely until COVID happened. And then when COVID happened, everybody got disrupted, markets got disrupted. Interestingly, we had 4 term sheets just before COVID had started in March 2020. One of
It was how much bigger round, and what round would that be?
Yeah, so it was, I think, total of about 50-60 million dollars. And one of them actually was not just a term sheet, it was actually a signed shareholder agreement, SHA. So the agreement is signed, and just the wiring was left. Wiring of money was left. But then, this was on, I remember the date, this was on March 9th, we signed. And from March 10th onward, the markets in US started going down significantly. And so the investors pulled out, because there was a lot of uncertainty at that time. And So yeah, I mean, I think that year 2020 was a, so you remember the lockdowns and everything. So the consumption went down, and obviously credit became much more challenging. Forget about giving more credit; it was about recovering what you had already given out in the market. And so with funding gone and not coming, and then credit collections costs and going into crazy numbers. Those 6 to 9 months, starting from March, April to sort of, I would say, end of the year, were very, very tough, extremely tough. Tough to the extent that, like we had to literally think of everything that we have to do, right, to make sure that the company survives and then grows from there. Even though we had good scale at that time, we'd already crossed $50 million of revenue, but we needed, our revenues were hit in a big time and losses were climbing up. One of the big calls we took that time was not to lay off anybody. So we actually ensured that it's okay, we'll cut down everywhere else, but because jobs, people are getting laid off also, and it's very difficult to get jobs in such a tough environment. So we decided not to do that and ride it out. Thankfully, we survived, and then and then from there on, we took a call that okay, if we can survive this and we can get close to profitability, then maybe we can do anything, and maybe we can also go public. And so we decided actually the next phase, which was preparing Mobikwik to go public. And this was in early 2021 as we were coming out of COVID. So Pasna led most of that effort, but it was the first time, obviously, for us, and so we were trying to figure out what all needs to be done. lot of changes on the company side, around governance, especially. So typically, a company is run by the promoters or the founders in sync with the investors. When you have VC funding. So now we have to build an independent board, a board of independent directors. So we built that board. We have to change the way we report our financials based on what public markets need, and that is much more thorough and much more, I would say, detailed, and needs to pass a much more sterner test. We always had a top four kind of auditor, but it was just a change in the standards of what is needed when you're going public. So we did that. We raised a bunch of money. We raised money from Abu Dhabi Investment Authority last year as we were going public. So yeah, I mean, I think we did well, and we didn't actually go public last year in at that towards the end of sort of October, November. The market is already peaked. So I guess we got a bit late, about maybe at least a month late. We should have gone earlier, but by that time the market had started turning. So we took a call that we are ready. We have done a lot of hard work, and to go public. So we'll do it at the right time, and that's what we are doing right now. We're continuing to build the company, and we had last 2 quarters which was really very good in terms of a business performance. So I would say this is a new interesting phase of the company. The company is transformed completely from what it was even 1 year ago. Forget about 2 3 years ago, right? Because as a private company, you're running the company and then trying to figure out what is happening, and you have less experience. Also, you try to figure out where will the money come from, or you need to become profitable. And if you become profitable, then you compete with competition who's burning a lot of capital, etc. So a lot of those ifs and buts and balances. And I think many times as entrepreneurs we slip up, and we try to do a lot of things, where which land the company neither here nor there. So thankfully we took a call that we are going to continue to grow, but we will do it in a profitable manner, and we need to have a very sharp focus on payments and buy now pay later, which continue to be our core strengths. So that is what we continue to build, and as and when the markets recover, hopefully the next phase of the company will start.
And what has really transformed, right? If you can point out to 3 to 4 things in the company in the last 1 year that you can point out to, which other entrepreneurs can learn from.
So I think one thing which has changed significantly is obviously the governance, right? I think the corporate governance in the company for anything, right? We are also a regulated entity. We have licenses from Reserve Bank of India. Plus, as a process, we became a public limited company with an independent board, and there are requirements. So when you're a private company, you still have a board of investors, but mostly they are your friends. That's why they are invested in your company. So follow the processes, etc. But still, it is more for compliance. I think once you get to the stage where we are, you have to follow things to the T, and you have to be very proactive in terms of corporate governance. You have to actually cannot afford to have misses there. Cannot afford to close your books, or to do filings or taxes or all those things, or anything which requires either a board approval or a board disclosure. Those kind of things. So I think that part has become fairly strong. We built a very strong secretarial and finance team last year. We hired a very experienced CFO, because we knew that is required in order to go public. So I think our finance, legal, and secretarial work and compliances, as a company, we've become far more stronger than we used to be before. And not for lack of trying earlier. It was more like you're focusing on growth and tech and building new things and getting customers and making a noise. But with this transformation, you basically are trying to cover for any gaps on the governance side. I think that is one. Second is we've become a little more process driven as a company. We don't change things or change strategies very quickly. Although you could say that as a startup, it's an advantage to change things every day. But then, once you have a strategy clear, then changing things every day, in terms of how you execute, also becomes actually a bottleneck. Because so I can say that I for example only now set the strategy, and I don't run things day to day. The day to day things are run with a lot of independence and freedom by the team. And I think that's a big transformation that has happened again in the last, I would say, 12 to 18 months. And that's thanks to the fact that we hired some competent management team as CXOs, as a CFO, as a chief product and technology officer. I used to be the de facto CTO. Pasna used to be the de facto CFO, but now we don't do that anymore. So we have people who do that with and manage their large orgs. So yeah, I think we have scaled up as a company, and as founders, we are focused more on vision and compliance, governance, and the next steps in terms of where we want to go.
Bipin, could you please share the revenue numbers of Mobikwik? How has the journey been on revenue, on profit, on growth?
Sure. So as a company, Mobikwik has always been focused on growth, but we knew that at some point we also have to start generating profitability. And the first step towards that is, before you become profitable at a EBITDA level or a PAT level, you have to become profitable at a unit economics level, which is in the common parlance known as contribution margin, which means that the revenue that you make versus all the variable costs, do you start making money on every transaction, on every business that you do every day. So we achieved that milestone sometime back in 2019, right? In 2019 of September month, we first time hit contribution margin profitability. And since then, we have maintained a significant growth while sort of hitting and maintaining contribution level profitability. In fact, in FY21, our revenue was 300 crores, which grew to in FY21 grew to 540 crores. So almost like a 86% kind of a growth. And within that, our flagship consumer payments business grew 144%, which was already at a very big scale. And the new business that we are building, which is buy now pay later, grew 840% in the space of 1 year, showing that that we are continuing to focus on growth. Uh, but while doing this growth, we also became profitable. In fact, in the quarter of December 21, we became PAT profitable for the first time, which we have maintained then again in the March quarter, which just ended, Jan to March 2022. So we believe that we are unique in that sense that it's possible to grow significantly while becoming profitable if you just operate it in an efficient and a disciplined fashion.
So just to reiterate again, the financial year 2022, you ended at 500 crores, and FY20
540 crores of revenue.
540 crores, and the FY21 you ended at 300 crores. So that's a significant growth in the revenue. If you could share some levers of what led to this revenue growth while maintaining profitability.
So, like I said, we became contribution margin profitable in 2019. So, from there on, the path towards profitabilities, overall profitabilities, that your fixed costs don't need to grow as fast as your revenue grows. Most of the fixed cost comes from employee cost, from your fixed infrastructure, office, IT, cloud, etc. Once you become contribution margin profitable, if the growth of your revenue and your margin is faster than your fixed cost, then you eventually will become profitable. It's just a matter of mathematical equation. So that is the biggest lever. We've always been very efficient, in terms of how we operate. We don't have a large team. Last year we had less than 500 people. I think that was the big lever that we grew the revenue, grew the traction, grew the number of users almost by 20-30%, grew the revenue so fast, but didn't let the cost increase at the same pace.
And you have experienced personally, right, two recessions, and you mentioned that whenever there was a significant moment in your life, the recession had just hit. So, do you think the economy is going into recession as per right, the global economy or the Indian economy?
I don't think so. I don't think so. I think the fundamentals of at least the overall economy. I'm not such a big expert, But when I see the tech-driven economy in India or the startups, and I think every single company, if you look at, starting from Infosys to TCS, which are ITs, IT-driven services companies, and the long tail in that space, to startups. I think every single company is doing significantly better than what they were doing last year. I think the economy is doing extremely well. Spends have gone up. In fact, that's one of the reasons why inflation is also up, right? Because consumer spending has gone up so much. Of course, there's oil price, etc., which is a dampener for India. But both US economy and India economy, I think in general, they are in great shape. I think it's only the markets which are, have actually, initially became too bullish, and now, because of the, certain changes in the geopolitics have changed. Uh, but otherwise, I think I predict that this year is going to be one of the highest growth years, especially for India. And so, while you may not hear about a unicorn being minted every week, but those who are there, companies, the core of the metrics like revenues and margins, etc., will significantly improve over the next 6 to 12 months.
And Bipin, if you can share with other entrepreneurs, right, what kept you going for 13 long years, and you are still like, really excited about what lays next? What has been that?
Well, I just like, I think, there's been a lot of times, I would say, crisis moments or times when you think, what is going on, right? I mean, is this enough, right? Good times as well as bad times. I think what's kept us going is, one is the space that we are in has evolved really continuously, and it has evolved to a point that 2 years ago what it was and what it is in fintech is already, when I talk about the broader fintech ecosystem, it's become far bigger. So as a technology enthusiast, as a product enthusiast, uh, even if I had to ever do something else, I don't know anything else except fintech. And within Mobikwik, there is so much innovation possible, right? We started with payments, wallet, UPI, the experiences, credit, and just take credit, digital credit, and that's itself is a fascinating opportunity. Small ticket, high ticket. Then there is insurance, wealth, for which I don't have enough engineers, and I don't have enough, mental bandwidth to actually say what to do in that space. So I think the space in the market has kept us going, and the fact that company, there's a certain belief that we are destined to become big, uh, because we have survived many different kind of crisis situations. Um, in 2019, sort of early 2019, we almost ran out of money. In 2020, I told you, like, 4 term sheets fell, one agreement fell, COVID happened. Even then, we survived, and now this year we have grown. We filed public. So I have a strong confidence that we can build a company which will keep going. From that point of view, it's a little different. I mean, there are different models out there. You can build a company, you can exit, etc. But what we are building in Mobikwik today is at least for, hopefully, for the long term.
And Bipin, if you can share, right, your views on the fintech in India. India has produced the second highest number of fintechs globally in the last 3 years, right? What have been the tailwinds that are supporting it right now?
I think India's biggest advantages are obviously, one is the demographics itself, right? Second is the economy, and third is the technology. We have a young population. We have an economy which is growing very fast, but most of the economy is non-digital, and most of the economy is, um, not people are not part of the formal financial system, right? I mean, even though people have gotten bank accounts, but number of people, cash is still at highest today in the ecosystem. Even though people are doing QR and all those transactions, even with UPI, etc., there is maybe 100 million, 150 million people who are into this ecosystem, but not beyond that. With a population of 1.4 billion. So demographics, the economy, and third is the technology. I think the technology part, where through a lot of regulatory slash government initiatives, through Aadhaar, through the India Stack, through the digitization of the entire banking process, not just the payment process, but the entire banking process, credit, insurance, etc. Digitization has become such a strong mantra from top to bottom. So there is a these three things are combining together to create huge opportunities at a company at a country of India scale, where you can, let's say, pick in insurance you can pick something like corporate insurance, right? And say insurance for corporates or insurance for startups, and that process is entirely broken, and you can build a pretty large company just in that space, right? Given the growth rate that is happening. Or you can pick SMEs, you can pick small businesses, and you can figure out a business model of how to digitize them, or to how to provide financial services to them. So the combination of India's size of demography, the economy of where it is, right, and the formal financial system and the technology push, which includes, not just Aadhaar, etc., but also Geo and smartphones and everything, which is obviously happened in a big way, means that India is actually, if you think about it, it's the only country in the world where more people have smartphones today than they are actively doing payments or digital transactions, or or even actively using bank accounts, or have credit cards. This is not there in any other part of the world. China is an example, but China is not a English speaking integrated into the world ecosystem. Of course, their fintech has done extremely well as well. So that's why I'm very, very bullish that fintech in India, the fact that we are English speaking, connected to the world also, and we have a large domestic economy which is growing so fast. Money in physical form, or money dealings in physical form, or dealing with other people with respect to money, whether taking a loan or buying an insurance or covering your risk, eventually all of it will become 100% digital. So you can imagine at India scale, what does it mean, in terms of fintech opportunity.
We have just touched the tip of an iceberg in the last 10 years.
This is actually just the beginning, which is what, you asked me, what keeps you going, right? Actually, right now is the right time to start a company in fintech, right? Not when I started, because when I started, the market was small, there were no smartphones, etc. So in some sense we were ahead of the curve, or ahead of the time. Right now is the right time. You pick a space and you build into it, and you can go build a big, very big business.
Bipin, also you have broken the norm that you have to be the market leader in B2C internet space to grow, right? When you started, there was already free charge in 2009. Then in 2012 there were Paytm and several other. Today there's Paytm, Phone Pay, Google Pay, and so many others. But you have been able to build a niche for yourself, right? So how do you build that a mental model, or how do you convey that to entrepreneurs? Because it's very single-minded today, right? In VC ecosystem, that you have to be the market leader to raise the maximum amount of money to just kill the competition.
Yeah, I think I don't agree with it. I personally don't agree with it. And you have to, for this to happen, you have to believe that history, lessons from the economy, and you have to look at the what happened, for example, in banking space, or in telecom space, or few other spaces, right? Just like, you wouldn't have one bank, you wouldn't have one fintech, you wouldn't have one UPI app, you wouldn't have one UPI app for customers. What you see today, for example, is, let's say, obviously some people take early lead, invest more, have more capital, they can acquire more customers, give more cashbacks, etc. But obviously that is not sustainable. Everybody has to figure out a business model at the next level, whether you do credit or become a super app or something like that. At the end of the day, right, you have to figure out what kind of a business you want to build. Market leadership in B2C or B2B, whether it is B2C, B2B, I don't think it makes a difference. If you do not have the advantage of basically eliminating completely the competition and taking all the profits away, which means become a monopoly like IRCTC. If you don't have that, then that market leadership is not very useful, because you will actually get more efficient people doing the same thing that you are doing in a much better way at a lower cost. And if they do that, if they provide better user experience, etc., then the users will migrate there. But in the process, obviously there is capital involved, there is cash burn, etc., involved. So in my view, if you look at Zeroda, for example, right? Now Zeroda has become a market leader not by raising VC money or spending a lot of cash. So, in my view, the market is opportunity in India is very big. People will still respect and like market leaders and give them a lot of capital, but then the expectations from them, therefore, are to grow again 10x from there. And we've seen examples where it hasn't worked out very good for many of the market leaders. It's far better as an entrepreneur, in my view, to build a company where you can control the future and the outcome. And that of course, you can, if you have a lot of capital, you can burn that, but eventually you have to build a sustainable business. So if you don't build a sustainable business, being market leader eventually, in my view, doesn't count for anything. As you can see, eventually these companies eventually have to exit. So somebody has to either buy your company or to the list. With the kind of valuations that we raise money at these days in India, like unicorns throw a stone and there is a unicorn. The exit paths are actually M&A paths are pretty are just non-existent. Nobody's buying companies at $1 billion, $2 billion, $3 billion in India. It's not as well developed in India yet. You don't have the Tatas and the Birlas and Ambani's buying $1 billion companies every week or every. There is some M&A, but it is nowhere close to the size of the ecosystem and the opportunity. And the second thing is, we've seen how the market treats companies which continue to do cash burn, especially when they go public. So I think, like, building a company which you can build up with positive margins, with great user experience, great engagement, and continue to grow 30, 40, 50% year on year. In my view, you can build a very large company and a large outcome for all the stakeholders. Trying to be a market leader, which involves, in my view, a lot of risk. And in that risk, we've seen even in our industry, we talked about, there are companies which actually flamed out and then burnt, and it went to zero. So if you're prepared to take risks where your companies can go down to zero, then I think that's a different, in my view, it's a different kind of strategy.
And we have seen last year, right? The public markets was a real test of a company. The company who were doing 300 crores of revenue, SaaS plus services company, India made. They went 3x to 4x on the listing day, and they're still above that price in such times, and doing just 300 crores in revenues, whereas companies larger that size but guzzling cash, public investors don't respect that.
I will give you sort of specific examples in India. Like, there are companies in the OTA space, travel space, for example, right? The market leader has been Make My Trip for a longest period of time. And after they did merger with GoIBibo and others, it became obviously the de facto market leader, right? 60-70% market share. But it is continued to sort of lose money, and the stock market hasn't liked it. The valuations haven't gone up, and on the other side, you had a player like Ease My Trip, which almost nobody had heard of, and it was profitable, and it went public, albeit in the bull run. But it's doing well. If you see every single company which goes for listing and where you get oversubscription, etc., there is something fundamental that is working in the company, right? If your business is not going to even survive if you do not have enough cash, then the public markets are not going to like it. And I think that's the call that has to be taken. They care less about market leaders. If that was the case, then you look at IT services, for example. You have the Infosys, TCS, but you have a lot of mid-level IT firms which actually trade at a higher multiple, right, than Infosys and TCS, etc. So I think it's not just about market leadership. In my view, it's about creating a company with growth and profits. I think if you can do both, well, ultimately growth is also important. That's how the investors make returns. So in India, we're chasing, especially in a lot of startups, we're chasing a lot of growth, but I think the ecosystem has become fairly big that you can actually be a contrarian, in my view, and you can say that I'm going to continue to grow only as much as my margins allow, and I'm going to fix my unit economics before I do growth at all costs. In that event, the chances of failure and the chances of not building, a large company are very, very low. You're almost guaranteed that you will end up building a large company. Investors themselves will come to you and say, "Boss, you're building a great company. How are you doing this?" Because others are not able to do it.
Thank you so much, Bipin. It's been a wonderful, wonderful conversation with you on your journey, on journey of Mobikwik, and how you look at, in a very different view at the ecosystem, which is working right now. And thank you so much again.
Thank you, Siddharth.